Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, everyone. How are you going? Thanks for joining us on the podcast today. It's a pleasure for us as we navigate property investment, all the madness that is COVID-19. Is the sky going to fall in? Is it a good time to be in property? All that sort of stuff. It's ongoing. It changes by the moment, changes by the minute. And I'm very fortunate that I get to have the opportunity to have these conversations and discussions with people right across Australia. Some of them are just investors who are starting out, trying to get an understanding of what's going on and embarking on wealth creation through property investment. I speak to a lot of other property investors who are at it every single day. They live it, they breathe it. It's their hobby, it's their small business, it's their side hustle. Some of them have 20, 30, 40, 50 properties as well as a day job. How they do that, sometimes I don't know. But also at the other end of the spectrum, there's a whole bunch of bright and capable people out there right across the property ecosystem who are every single day crunching the numbers, looking at the data, trying to understand what's going on. And then the important bit of it, being able to synthesize and give a narrative around how you can use this information to make more informed investment decisions. I'd like to bring him in the studio. I have one of the guns in real estate, I'm going to call him that, with me over Zoom today, Cameron Kusher, Executive Manager, Economic Research at the REA Group. I've known you for many, many years now, but this is the first time I think we spoke with you now in the red team with REA Group. I reckon it's a coup for them to find someone like you to come in there and help me out with this sort of stuff.
Well, it's good to be here, and obviously it's good to be talking to you again, Phil. So thanks for having me.
It's good, mate. So how's the world changed? Like, I must have known you for a decade now. We're still talking about property numbers and property data, and today I'm going to pick your brain on rental markets, property markets, dynamics right across the nation, and help give some sense to property investors about where they should be looking or what they should be concerned about. But has things changed that much? Probably how you do it is very different, but the outcome's probably still quite similar.
I mean, if you asked me this question probably start of this year, I'd say things haven't changed that much, but I think COVID-19's really changed things a lot. That waiting, 6 weeks or a couple of months to get an insight into what happened 2 months ago no longer really cuts it in this world. What we really need to be able to talk about and see is what's happening in the market right at this minute, because things can change very rapidly, as we've seen over the last 6 months. And having those insights into what people are doing now, what the market's doing right now, is more important than ever. And I think that's not just a property thing. I think that's a broader economics discussion as well. If you look at what a lot of the banks have started doing since COVID-19, they've been publishing data on a weekly basis about what's happening, what they're seeing across their systems. And I think that's kind of the standard and the expectation now, that the data is real time. It's not having to wait to see what happened a few months after the fact.
So, Cameron, can you give me some sense? And people ask me this question quite often, and I'm not sure whether or not I give a good enough response, but can you give me some sense for the relationship between property meets finance meets domestic economic drivers, which meets politics and policy settings, meets geopolitical saber rattling, with trade wars and sort of, global finance or global economies? How much is it all interconnected? If something happens in America and Donald Trump, for example, wants to start a fight with the Chinese, does it actually have an application in property markets?
Look, it can. It's probably not a direct influence, but, if the US was to go and start a war with China, and, we do have an ANZUS treaty here in Australia, so we'd probably be pulled into any war. Obviously that would mean that there's going to be fewer Chinese people looking to come to Australia, looking to buy property in Australia, and it does have a flow-on effect. So everything that happens, I guess, can come back and have an influence on the Australian property market. But I try not to look too much at what goes on overseas and see how that influences. I mean, you go back to 2008 when the housing market in the US collapsed, and there were calls that because the US collapsed or because Ireland collapsed, that was going to happen here. And of course, it didn't. Different policy settings, different views towards property, different lending standards in different countries mean different things. And obviously having a look at what's happening around the world, having a look at what's happening domestically with the economy, first recession in almost 30 years, what's happening with finance. All of these things are very important to consider, whether you're making a property investment, whether you own a property, or whether you're thinking about selling a property.
So what's the biggest influence to the Australian property market, as we say, and by property market, I mean, let's limit it to residential property. What's the biggest influence right now that's not COVID-19?
I think the biggest influence at the moment that's not COVID-19 is actually where interest rates are. And I think the fact that the cash rate's sitting at 0.25%, the lowest it's ever been. Some lenders are offering 3 fixed rate mortgages for 2.25, 2.3%. I think what we typically see when interest rates are very low is that housing demand picks up. And to some extent, we are actually starting to see that in some of the high frequency data we're seeing. Of course, the fact that we're in a recession has really contributed to the recent weakness. But I think people are underestimating the impact of those ultra low interest rates. Also, the fact that international borders are shut. We know that people that are probably saving for deposits for homes would have been planning to go and spend maybe a month in Europe or maybe a month in the US, spending, $10,000, $15,000. Now they can't do that. Perhaps they now consider bringing forward the purchase of a property or bringing forward the purchase of an investment property because they have this cash sitting here. They probably got a little bit of a savings already in place, and the cost of borrowing is so low at the moment.
So as someone like the majority of listeners, I would imagine, is looking for the strategy of wealth creation through property, how worried or how concerned should I be about the state of the property market in Australia with that objective in mind? Very general question, but this is
this is not financial advice. Read my review, but look, I think people should be aware of the risks. I mean, we've seen even just this week, APRA has come out and said that 10% of mortgages are on some sort of deferral at the moment. We also know that rents are falling across most capital cities and particularly in the inner city unit markets. Vacancy rates are climbing. A big driver of housing demand is obviously that people come and migrate to Australia and then they have to go and rent when they first get here and then they go and buy a new property after they've been here for a little while. That driver of demand is not going to be here. But I think a lot of this is actually just short-term stuff. If you are looking at property from a wealth creation perspective and you're planning to hold for the next 20 or 30 years, the short-term volatility, it's a lot like the share market, right? The short-term volatility shouldn't really worry you too much. It's all about the next 20 or 30 years horizon. But certainly, I think there are a few more headwinds in the property space at the moment than we've seen for quite some time.
And I imagine you're probably, when we're out of COVID-19, you're up in Queensland, so you're allowed out a little bit more than what we're allowed out here in New South Wales, and our friends and colleagues down in Victoria, completely different kettle of fish. But I imagine you're probably a pretty popular bloke, Cameron, at dinner parties because it always leads to a property conversation. And I imagine people would just go, "Oh, Cameron, you're in property. You're a property economic researcher." What are the most common questions you get from? It must be that person to talk about it. Can I just have a glass of wine? But what do most people ask you when they know what you do for a living? Is it where should I invest?
It's probably more where should I buy? And I will add, one of the beauties of being in Queensland is certainly that people aren't quite as property obsessed as they are in Sydney and Melbourne. So and to actually not get asked those questions that much up here in Brisbane, but certainly when I'm in Sydney and Melbourne, all anyone wants to talk to me about is property. And it's, what's happening with property prices? Where should I buy? Should I buy? Should I invest? Those are the types of questions that everyone wants. And I guess that makes sense. For a lot of people, buying or selling a property or buying an investment property is one of the biggest expenditures that they'll ever have. And people want that level of comfort that they're doing the right thing. And if they already own a property, they don't like it when property prices are falling because they feel less wealthy.
And I'll put you on the spot here. What should be, so the questions that people probably ask you versus the questions that people should be asking you. So in this current market, COVID-19, as a property investor, and for the context of this podcast, we're investors, what should the questions be that you should be asking yourself when considering how you approach property into this next sort of market cycle?
Well, I think the big one as an investor is who's going to rent out this property and what's the likelihood that I can keep a tenant? Where's my competition from a rental perspective? What's that priced at? And what can I do to make my property more appealing than the others and make sure that I keep the tenancy? Because the thing that will bring you unstuck as an investor is, if you've got a renter and you lose that renter and you can't replace them. And obviously at the moment, rental demand is significantly reduced because we don't have people moving to Australia from overseas coming in those borders. So I think you need to find unique properties that have demand, not sort of cookie cutter product that is easily replaceable. And I don't want to badmouth any particular areas or anything like that, but certainly if you look at the types of areas that are going to be impacted by the shut borders, obviously there's no people coming into Australia, international students, so apartments around universities, there's going to be a lot less demand for that type of product. But, there's other things to be looking at and other ways to make sure that you keep your property occupied.
Well, you just give me a really nice segue into chatting about rental markets, and I'll take your point around scarcity and making sure you're investing in areas where there will be demand. We're just going to go a break beforehand. When we come back, we're going to get into that back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Cameron Kusher, Executive Manager, Economic Research at the REA Group, which is the business behind realestate.com.au. Did you live and breathe, and is that your key tool for working out what's going on? It's not a bad website.
Oh, look, there's obviously a lot of data that we can extract from the realestate.com.au website. We also have a data business as well, so we get a lot of information from there. And we also clearly look at all the economic data that's out there. So there's lots of ways to get information, but certainly the realestate.com.au website's a good source of information.
And we'll get into in rental markets, but to help our listeners, Cameron, if you can give me some insight into how you personally use data, or what data sets or data bits you use in order to form an opinion on something. So if you're just starting out in property, thinking about what sort of is the key data that you need to be connected in, leveraging or synthesizing, where would you start and where would you sort of stop? Because I imagine you get at a completely sophisticated level where you're crunching data sets that no one else has access to.
Yeah, I mean, I'm lucky I get access to a lot more data than the average Joe on the street does, but I think prices are clearly very important. I think there's, from an investor's perspective, it's important to look at rental yields, vacancy rates, rental growth, even things like how long properties are taking to sell, what level of discounting is taking place. As I said, I'm lucky I can look at other data that we get, like demand in terms of search volumes and things like that. But look, I think there is a lot of data that is freely available nowadays to purchasers. And I think that it's important to use that data to form your opinion about whether you're making a good investment decision or not.
And a good investment decision, as Cameron mentioned before we went to the break, at the moment, a lot of it's going to be about how you generate income from that, which means you need to be renting the thing out. We share on Smart Property Investment our portfolio, and we've done reasonably well in terms of navigating COVID-19 and keeping people into our properties. We've had to make some reductions purely because of the state of the market, but where we have invested, Cameron, is typically in areas which are not impacted by a more transient group of people, whether they're international students or backpackers or young professionals who are all gone back home to mum and dad, or people in hospitality because they can't afford their rent anymore. So we've been reasonably well buttressed around it, but there are some pockets of capital city markets where they've been hugely impacted from a rental point of view. And they've probably got the double whammy, Cameron, of being in areas with a high percentage of transient style renters matched with every single apartment looks the same, feels the same, and is largely identical. So it's hard to have a point of difference. Would that be a fair assessment?
Yeah, I think so. I mean, if you look at what we've seen during this recession that we're now in, people under 30 have overwhelmingly been more impacted by job losses, and that is a profile of a renter. You've got borders shut. We know that international students have become a huge part of our higher education here in Australia, so you don't have that demand as well. And if you think of where these people typically rent, it is in city apartments, it is apartments near universities. And to be honest, there's not a lot of difference between a lot of these apartments. A lot of them are smaller 1 or 2 bedroom style apartments, and in buildings where there can be hundreds of essentially the same apartment throughout the building. So I think if you're holding that stock, then, there is the possibility that you're going to have some trouble renting that out over the next little while. But if you've got, maybe a 3-bedroom apartment, or if you've got a house that's going to appeal to a family rather than those are the kind of things that are probably going to put you in better stead in the current market than, a smaller 1 or 2 bedroom apartment.
Now, we haven't really spoken too much about numbers. We've been sort of given a narrative around what the numbers are. So I wouldn't mind if you can indulge me, Cameron, on doing a bit of around the grounds on rental markets across our capital cities. And I'll leave New South Wales and Sydney to last. What's going on over in with our good friends who are really locked down in Western Australia, in Perth at the moment? How's the market tracking there? They've shut the borders up. It doesn't look like they're going to open them for a little while. They're probably doing better than most.
They are. I mean, from a rental market perspective, the June quarter, we saw rents in Perth fall by 0.7%. But if we look at some of our other data, inquiry in Perth and Western Australia has actually gone really strong, particularly from first home buyers and particularly for vacant land and new housing estates. And this is really on the back of home builder. And whilst we're talking to investors here, I think the home builder package is something that they definitely need to consider as well, because what home builder is doing is pulling forward demand from first home buyers. And think about where those first home buyers are coming from. They're renting properties. So home builder is actually a bit of a double whammy for the rental market, because it's pulling out some of your rental demand when rental demand is already weak. So it's going to potentially make it even tougher for people to be renting out their properties going forward.
It's a really good point. If we go up north from there into Darwin, what's happening up there in terms of rents?
Yeah, so Darwin's had a bit of a tough slog for quite some time. Over the last quarter, we saw rents fall in Darwin another 1.9%. Again, keep in mind, Darwin's a very transient population. You've probably seen a lot of people that were working up in Darwin go home, whether that be to other parts of Australia or other parts of the world. Very high rates of renters in Darwin as opposed to the other capital cities. So not a surprise really to see some fairly large rental price falls there.
And down South Australia, who, let's be fair, have navigated COVID-19 pretty well, shut their borders up as well. How's rents down there?
So rents actually increased over the quarter, very marginally, 0.1%, down from a 0.5% increase over the previous quarter, but holding up reasonably well. And as you said, Adelaide and South Australia has done fairly well in terms of COVID infections and stopping the spread coming in from places like Victoria and New South Wales and other parts of the country.
And to the Apple Isle, Tasmania, Hobart, rents down there. I think I read over the weekend they've copped it pretty hard in terms of rents.
They have. So, I mean, the previous quarter, so the March quarter, rents in Hobart increased by 2.2%. June quarter, they only increased by 0.2%. So there was a fairly dramatic slowdown. And we know that there are, a big rental deficiency in Hobart. We know that there's been huge demand, not just pushing up property prices, but also pushing up rental rates in Hobart. And that's come to a bit of a screeching halt over the last quarter.
Yeah, and a lot of this is just market dynamics, which you would expect. And for a lot of investors, they were attracted to Hobart or wider Tasmania, some of the other regional centres like Launceston, sort of 4 or 5 years ago, because property prices the actual buying prices were relatively low and there was some good yields available out of it. So they were sort of trading off a cash flow play and also getting a bit of an upside on the capital growth. So that might recalibrate a lot of people's portfolios and turn the cash flow position in them different sort of moving forward. Well, what's your long-term outlook on rents in Hobart?
Yeah, it's an interesting one because Hobart, again, is very reliant on people moving to Hobart from other parts of the country, because a lot of the kids in Hobart finish school, go to university somewhere on the mainland and don't come back maybe till they're 50 or 60 years old. So I think getting the borders reopened is going to be very important for Hobart and for Tasmania. And that will eventually happen. But I think it's also lost a lot of its affordability advantage. I mean, you look at the cost of housing in Hobart now, it's more expensive than Perth. It's more expensive than Adelaide. It's still a lot cheaper than Melbourne and Sydney, but I think it's probably not going to be as attractive as it was pre-COVID, even though people obviously can start working remotely and do things like that again. But I think if anything, it'll probably move out of Hobart to other parts of Tasmania, the likes of Launceston or Swansea or these kind of places. I think Hobart's just a bit expensive nowadays.
How about up your neck of the woods in Brizzy? How's rents holding there?
So rents, same as Perth, actually, fell by 0.7% over the quarter. Hasn't been a huge amount of rental growth in Brisbane over recent times, and obviously COVID has impacted on that. not as many international students in Sydney as we see in Sydney and Melbourne, but certainly that there is a fair amount of international students in Brisbane. And I suspect a lot of people have gone home and started living with their parents again. And I think those people that are still renting through the eviction moratorium period will be looking for cheaper rents when we get to the end of that and when their lease is up.
Can you give me a bit of inside view, Karen, on how this data, before I get to Sydney and Melbourne, how this data is created? Is it based on the liquidity of rents? So do you pick up the data on the basis of it was rented at this before and now it's rented at X, now it's rented at Y? So a lot of this data will be influenced by the transactions that are taking place, or is it on currently rented stuff that's changing? How does it work?
Yeah, so I'm actually, the data I'm quoting is from CPI, so Consumer Price Index, which is on new rental rates. So it's based on consumption, so people consuming new rents. And one of the reasons I'm probably using CPI data as opposed to our own data is we're finding that on the one form system that we own, about 25% of people applying for a rental property are putting in a manual figure, which to us would suggest that they're probably offering less than what the advertised price is. And to be honest with you, that 25% actually sounds a little bit low to me. I'm surprised it's not a bit larger than that. But I think the overwhelming point is that advertised rents are not really capturing the true state of what's happening with negotiations when someone actually goes and looks at rental accommodation and starts negotiating with the landlord and the property manager.
So I want to have a chat around CPI. We'll do that in a moment, Cameron. Let's just stick with rents. So let's go down to Sydney. How are rents holding there?
Yeah, so over the quarter, Sydney saw the biggest fall in rents of any capital city. They were down 2%. So that shows you, quite a big adjustment in just a 3-month period. And I think I was probably a bit surprised that Sydney saw the largest fall, because we know that Melbourne, for example, had tighter lockdowns. Obviously now it's in stage 4 lockdowns as well. And does tend to have a lot more international students, but rents in Melbourne only fell by 1.1%. So Sydney saw the biggest drop of any of the capital cities over the last quarter.
And what's happened in Melbourne, I imagine worst is yet to come when it comes to rents, and we can chat around in a quarter's time what it looks like. How's it fared over this last period? Yeah,
so rents fell 1.1% over the quarter. So not as severe as Sydney's 2%, but certainly 1.1% in 3 months is a fairly sizable fall. And I guess kind of reflects the fact that Melbourne did have that tougher shutdown. And Melbourne also does have a very high number of overseas students. And it does have a lot of young professionals that move to Melbourne from other states and territories and probably rent when they first get there. And people now are looking for cheaper rental accommodation, or they've gone back to live with their parents, or the overseas students have gone back home.
So you mentioned this is CPI data, so the Consumer Price Index, which has been in the headlines the last couple of weeks because negative. You read anywhere and they've been talking about what CPI means. Can you give some sense for our listeners who might not be that connected with what the CPI is and what it means and what you can read from it in the context of property investing?
Yeah, so CPI is basically a measurement of the cost of everything in the economy. So when you read through the data, they have categorized basically everything. But I think from the property perspective, because it's talking about consumption of things related to the property is actually the biggest overall basket of goods in the CPI calculation. So you think of what you consume. You consume if you buy or build a brand new home. You consume rent if you're renting a property. Other costs associated with property are, energy. So whether that's electricity, gas, household fuels. And just look at your own bank balance. If you're renting or if you have a mortgage, that is your biggest cost. So what happens in the property bundle of CPI definitely has an impact on overall CPI, and falling rents clearly having a contribution to the deflation we saw over the quarter. The other big contributors to that were the fact that people stopped paying childcare, virtually fell to nothing, and petrol prices dropped dramatically between March and June as well. And petrol prices obviously a big area of consumption for a lot of people as well.
So it'd be a fair assumption for our armchair economists, property investors, to say that if CPI is going backwards, it's typically influenced considerably by property market dynamics just based on that. So there is a marriage between the two.
That's right, yeah.
Okay.
I guess for anyone out there that understands why CPI's falling's bad, cheaper prices are great, but from an economic perspective and an economic output perspective, if prices are falling and people expect prices to continue to fall, they'll stop consuming. So there's no expenditure going on in the economy, which means people start to lose jobs. So whilst we may not like the price of things going up, some inflation is certainly good from an economic perspective.
Yeah, I completely agree with you. And this is Economics 101, but I like to keep things pretty simple, Cameron. And the way you've just framed that is everyone should be able to understand what CPI means, in terms of, yes, it's cheaper for the cost of living, but that means it's going to impact as a property investor on your investment. So work out how they live and breathe together, and hopefully they can help you make more informed decisions. Cameron, we're going to go to another break. When we come back, let's get into capital house values and prices. So back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant here, host of the Smart Property Investment Show with Cameron Kusher, Executive Manager, Economic Research at the REA Group. We just had a really good chat around CPI and what it means and how you need to be right across it, and how rents have been a big driver in the fluctuations to CPI. Property prices, Cameron, which is Australia's hobby, is to talk about what property is worth. And it's probably one of the very few places in the world, in my sort of travels far and wide, where it's okay to talk about money when it comes to property. You can say to someone back to a dinner party, what's your house worth? Because the reason why is you've got realestate.com.au out there right now, and you can have a look at anyone's house anywhere in Australia. You can have a look inside, you can see the pictures, and it's going to tell you how much it's worth. So it's all okay. It is a national pastime. How are property values holding up as a nation? And let's start there, and then maybe break it down sort of state by state.
Yeah, I mean, nationally, we don't have a publicised index just yet. That's coming later this year or early next year. But if we look at what we're seeing, we're definitely seeing some price falls pretty much across the board. To be honest with you, they're fairly moderate, what we're seeing at the moment. But that's really being driven by the fact that there's not anywhere near as much turnover as we usually see. And I think also the fact that banks have extended mortgage holidays to a lot of borrowers is saving us somewhat from a deeper downturn that we could have possibly seen going into COVID-19. Also, don't underestimate the fact that at least that first wave of lockdowns, we got things under control a lot quicker than anyone probably expected at the time. We started to open back our economies, and, touch wood, Victoria can get itself under control sooner rather than later, and the number of cases in New South Wales starts to fall again. But outside of Victoria, economies are back open. It's not quite the same as it used to be, but businesses are open. People can go out and do things, and that certainly helps. That puts people back in jobs, and that means that they can pay their mortgages, they can pay their rent, and that's all positive.
You mentioned earlier in the podcast that the biggest influencer on the property market, residential property market in Australia at the moment, is access to money or finance or interest rates in particular. And I agree with that. Take me back to mid to late March when Australia realised what it had ahead of them. A lot of and our banks, for our listeners who aren't familiar with this, and many of them are the envy of the world. They steered Australia through what was the global financial crisis, just with the strength of their balance sheets and the way in which they lend money. That helped us out quite a lot. But if I think back to then, Cameron, and you'll be right across this, that some of the major banks came out with some pretty dire predictions. I think Commonwealth Bank, by memory, was sort of worst case scenario, 30% reduction in prices. Best case was 10%. Some of the other banks landed a little bit higher than that. Macquarie, for example, I think was sort of circa 5 to 10. Don't hold me to that. But everyone came out saying property prices are going to go backwards and it could be really, really bad. Here we are sort of 4 months on. When March happened and that rhetoric was coming out, your initial perceptions about what you think of property prices, where were they? And have we landed where you thought we would be? And this is the benefit of hindsight, so you can make it up.
Personally, I didn't think that prices would fall a lot of that as deeply as a lot of those predictions. I thought we'd probably see somewhere around a 5% fall peak to trough. And that kind of looks like what's playing out at the moment. Obviously, I think Victoria is probably going to do a little bit worse than that, given that it's had to go back into lockdowns, and they're saying 6 weeks, but it could be longer than that. But I always felt a few things, that we were underestimating the impact of the low interest rates. We know historically low interest rates do drive demand. I think we're also underestimating the fact that we were going into a recession, but it wasn't a recession driven by an economic downturn. It was a health issue. I think also, I was given some comfort by the announcements that the Reserve Bank came out about, keeping lending. I think also that the Australian Bankers Association came out, offered mortgage repayment holidays. I think I kind of suspected that we would see something like that. I always also felt like there was going to be some sort of housing/construction industry stimulus, and we've seen that from home builder. And a lot of people aren't happy that when things get tough, the government tends to lean on the construction sector and provide stimulus to it over and above other sectors. But the truth of the matter is it's a big portion of the economy. It's a big employer. And if you can stimulate housing construction and stimulate the market, people are going to feel wealthier. They're going to go out and start spending again. People go and buy houses. They need to fill houses with furniture. So it does have a multiplier effect across the economy. Saying that, I don't obviously want to say that, yes, I nailed my prediction, because this is still a pandemic. There's no vaccine. We've seen that there can be breakouts like we've seen in Victoria, like we've seen a little bit of in New South Wales again. And I don't think that the battle's over by any stretch of the imagination, but I do think it's reasonable to expect that the government will do a lot, and it's already done a lot, to try and support the construction sector and try and avoid property prices taking a big nosedive. That doesn't definitely going to be successful, but they are going to try to make sure that happens.
It's very grassroots policy if you stimulate at that level, you get construction happening. To your point, it generates wider economic activity. The government came out today even saying how they're going to start accelerating or fast tracking a whole bunch of bigger construction programs. And we're talking about extension of ports and rails and new freeways and stuff. It's the same vein, right? Everyone benefits from the infrastructure because it helps with commerce and helps with travel and all that sort of stuff. But it's the engine of the people who are doing the work, the small businesses, the subcontractors, the major contractors who stimulate the activity. So it's a smart play. But when you look at across Australia and the relationship between the drivers of positive price growth, a lot of it is going to be infrastructure related, a lot of it is population related. We go through this all the time, the Smart Property Investment Show. With that in mind, what's going to happen moving forward? Where are we at across each of the states and your prospects for growth moving forward? Let's start in Perth. What's going on over there? And if anything, that was a bit of the darling of property investors, where people are going, it's had such a rough trot. There was some green shoots of recovery out there. Are they still there?
I think they are. I think home builders really helped that market. I think things have gone basically nowhere for 10 years is really helping. I think also, maybe the prospects that some people from Perth will be able to work remotely, so they may not necessarily move to Sydney or Melbourne for those jobs. Maybe they can do those jobs from Western Australia. But I think that the Perth market's probably going to come out of this stronger than most of the other capital city markets, just based on the fact that the prices are fairly cheap. I mean, there was a time when Perth was more expensive than Sydney. Now, Perth property prices are similar to prices in Adelaide. It's got a very good lifestyle and it's got fairly cheap housing, particularly new housing, and a lot of pent-up demand because people just haven't been buying over recent years.
And it's like north of 45% of all Australian exports now going to China. A lot of that is the stuff they dig out of the ground around that way. So, there is still a big drive for economic activity, and that will be connected in with price growth moving forward. Let's go back up to Darwin, which often gets forgotten as a place to invest in. You said they're doing it tough in terms of rents, very transient, very industry dependent. What's going on up there, mate? Yeah,
look, I think Darwin's going to continue to have a bit of a tough trot of things unless we see some big infrastructure projects announced like we did during the GFC, largely because it is a very transient population. People go there for those jobs, and then when those jobs aren't there, they leave. So there's not a lot of things at the moment driving people to want to go and move to Darwin. But if those projects do get up and that can stimulate that local economy, then it might start to do better. I mean, even notwithstanding the price falls and the rent falls we've seen, rental returns are actually reasonably good there. But again, the challenge is actually finding that right property that you can keep rented for 52 weeks of the year. But if you consider where interest rates are, if you look at returns on most other asset classes in terms of real returns, they're negative. One of the benefits property does have, if you get the right property, is you've still got positive real returns. And Darwin, obviously, amongst the best yielding of all the capital cities.
How about steady as she goes? Adelaide, is she still steady and still going?
She is. I mean, it sounds cliched, and Adelaide people won't like this, but it's kind of reflective of the city. It's kind of
Easy, be careful.
Yeah, I know. It's slow and steady. It rarely shoots the lights out. It rarely really massively underperforms. It's just a steady performer. Again, I think Adelaide's one of the markets that could really benefit if businesses do embrace this remote working, because Adelaide's a lot cheaper than Melbourne and it's only an hour away on a flight. People might start looking to some of these other capital cities where the cost of housing is a lot cheaper, the lifestyle's good, and most businesses these days will have an Adelaide office that someone can work for, and maybe there's an opportunity for people to go to Melbourne or Sydney for 2 days of the week and then work from Adelaide for the rest of the week. And I think that kind of rings true for markets like Southeast Queensland and Tasmania as well.
Yeah, Adelaide's interesting and it's attracting some good business. For example, the government recently committed $270 billion to defence spending for the next decade. And a lot of people don't actually know that South Australia is probably the strongest state when it comes to defence spending. It's also home of the Space Agency, but that's where they're building frigates and submarines and offshore patrol vessels. So there's a lot of work down there, and they're going to need to attract a lot of people into Adelaide to deliver on a whole bunch of this other stuff as well. So go and have a nose around that and get a feeling for how economic drivers are supportive of price growth, or at least consistency in price growth. So they're not going to shoot the lights out, but longer term, this is what you need to be looking for. Now let's shift our attention to Tasmania.
Sorry, just quickly jump on there. I think the point I'd make to your listeners is give Adelaide a chance. It's actually one of those cities that really grows on you. I remember the first time I went there, I was a bit ho-hum, but every time I go back there, I tend to like it a little bit more each time. It is a good little city, Adelaide, and it has got a lot of going for it, particularly if you like wine. There's lots of wineries close.
There's lots of cool stuff there, and sounds like we're on the Adelaide or the South Australian Tourism Board, but I can see why people would want to live there and why they would want to raise a family there. The continuity of employment prospects, the diversity of the economy. There's a whole bunch of things going for South Australia. So I echo your sentiments. Go and have a chat about it and get rid of your East Coast bias maybe. And I'm happy to put my hands up, and I've been that person in the past as well. I think Adelaide's a cool place, and it's got some good leadership now. Maybe I don't want to go too political on this, but they had a change of government after many, many years into the Liberal government, and he seems to be doing a pretty good job attracting a lot of this business into it. So, all these things together combined, not individually, but all of it combined and collectively will influence and shape property markets. But maybe we can do some more 101 economics, property economics stuff in the future, Cameron. But let's go to Tasmania. We touched on it with rentals, and it feels as though there's pressure now on price growth. Is that right?
That's right. I mean, I think after 5 or 6 years of really strong price growth, particularly in Hobart, I don't think we're going to see it return to those levels. But again, as I just mentioned about Adelaide, I think if you look at Tasmania, it's an hour on a plane from Melbourne. Again, if people are given that flexibility to work from home, it could become more desirable. But I do feel like maybe a lot of people are now looking at Hobart and going, geez, this is actually pretty expensive, and maybe looking to some of the other areas of Tasmania like Launceston and even, some of the more remote places like the Tamar Valley and these kind of things. Maybe that's the next area for growth in Tasmania rather than just focusing on Hobart.
So speaking of growth, I bought a whole bunch of property in Queensland about between 4 and 6 years ago, waiting for this big growth curve, which hasn't really been forthcoming, and sort of Brisbane and let's call it southeast Queensland. Has COVID taken the winds out of any of the sales of growth, or what are you seeing up there? Should I just hold firm?
Yeah, look, from what I'm seeing, the market up here is actually reasonably, it's not strong, but considering where we are, things are still ticking over, sales are still happening, there's some decent prices happening. And again, I think that the lifestyle factor that Southeast Queensland can offer and its proximity to Sydney will potentially see a lot more people seriously thinking about making the move and doing the telecommuting if they have to. I think that's something that we definitely see more of. Again, I don't think the next few years anywhere in Australia is going to shoot the lights out, but I do think that the affordability story of Queensland, the weather for at least 6 months of the year through winter is pretty awesome. I think that is going to attract people that are given that flexibility to not have to be in the Sydney or Melbourne office all day, every day. It's going to offer some appeal. We know that people from Melbourne love Noosa, and we know that people from Sydney love the Gold Coast. So I wouldn't be surprised if we see that interstate migration to Queensland, which has already been picking up, continue to be strong once all the borders are back reopened permanently again.
Yeah, I want to chat about this commuting dynamic, but let's just round out Sydney and Melbourne. I guess, we speak a lot about them, so we don't need to dwell too much on it. What's going on in those two places?
Sydney's obviously, Berejiklian government is pretty keen not to have to lock down the city again. And COVID cases haven't been rising too much, 12, 15 cases a day at the moment. So they seem to have things reasonably under control. And I think the Sydney market will do all right. I mean, it's still the biggest. Obviously, both Sydney and Melbourne are going to be impacted by the fact that migration's nothing at the moment. And most migrants that come to Australia settle in Sydney or Melbourne because that's where the jobs are. So that will have a bit of an impact on the market. Sydney's also going to have challenges, just the cost of housing in Sydney. But the lure of the biggest city, I mean, the reality is most people that come to Australia have heard of Sydney or Melbourne. They haven't heard too much of Brisbane, Adelaide, Perth, any of these other places. So people will want to go there. But it's really a question of when the borders reopen. And I think Melbourne, the fact that it has had to go back into stage 4 lockdowns, I mean, the reality of recession is that some of these businesses won't be able to successfully reopen. And Melbourne could be a bit of a repeat of what we saw coming out of the 1991 recession, that it does lag the rest of the country for a number of years, just because it has been harder hit to date. Touch wood again, that things start to improve right across the country. But you would have to think that Melbourne is going to lag behind the rest of the country.
So the big conversation dominating most property investors right now is how COVID-19 is going to change the way in which Australians work moving forward. And that you can frame in the context of you're not wed anymore to potentially coming into an office from 9 to 5 every single day. So what does that mean? It means that it gives people more choice with where they live. Now, everyone's chatting, Cameron, around, regional coastal locations or sea change locations are going to grow immensely in popularity as more people escape the hustle bustle of the city for better houses, bigger houses in cheaper locations, so they can trade up or free up money by moving and having a better, inverted commas, quality of life. Are we seeing any of that playing out yet in price growth or any demands in that regards, or is it just pretty much ideas and musings at the moment?
Everyone's been asking for it. There's not a huge amount of evidence that we're seeing on our website in terms of search volume or price growth in these areas, but it is still pretty early days. What I would say is I think that we're going to be given more flexibility to work remotely and work from home, but I think most businesses are going to realise that if people aren't coming into the office, you're not going to have any office culture. So I do think that there's still going to be a requirement to be in the office a few days a week from most businesses. But what that might mean is instead of having to have everyone in the Sydney or Melbourne head office, maybe some people that live in Sydney or Melbourne will move to Adelaide and work out of the Adelaide office and maybe fly to Melbourne a day or two a week, or they'll live in Brisbane or southeast Queensland and fly to Sydney a day or two a week and then work from Brisbane for the rest of the week or work from home for the rest of the week. I still think that it's going to be important to have that connectivity. And I think whilst the idea of, going and living in this coastal town in the middle of nowhere and working from home is great in theory, I think the practice will be that you're still going to be expected to be in some shape, form of the office, probably half your working time. So I think that it probably lends itself more to places like the smaller capital cities, as I've already mentioned, or coastal areas, in Sydney, maybe Wollongong, maybe even pushing up all the way to Newcastle through the Central Coast. In Queensland, obviously Gold and Sunshine Coast. In Melbourne, down on the Mornington Peninsula might become more popular, or Geelong, or down along the Surf Coast. But I think you still need to be reasonably close to the capital city, or in a position where you can jump on a plane and get to the capital city if you need to. And that is a pretty select few areas around the country, to be honest.
Yeah, I tend to subscribe to that same philosophy around that. I think if you can jump in a car and get to work in an hour and a half, some people will tolerate that as a commute, a day or two a week, maybe 3 days a week. But when you start getting over an hour and a half or 2 hours in a car each way, it starts to compromise some of the reasons why you do choose to move. I really enjoy the chat, mate. We've covered off. I know it's quite a challenging one. It feels a bit superficial, the fact that we've moved so fast over so many different areas, rents, capital growth, and also sort of COVID. But I think it's a good start for us to maybe connect in a little bit more often, and we can narrow down next time we get together on a couple of different things, and we're happy to cover off anything anyone really wants. You up for that, mate?
Yeah, that sounds great. Thanks for having me, Phil.
Yeah, nice one. So get in touch with the team, editor at smartpropertyinvestment.com.au. We can do a Q&A with Cameron. We've already got a whole bunch of questions locked away as well, but if you want to specifically have a discussion with us around property markets, rental markets, the wider economy, even if you just want greater understanding about how all these things have a relationship with each other and what does it mean and how you can actually use data to make more informed decisions, we're happy to do that as well. So editor at smartpropertyinvestment.com.au, email us there. We'll check it out and we'll make sure that happens. That's Cameron Kusher, Executive Manager, Economic Research, REA Group. Thanks again for your time, mate.
Thanks, Phil. Thanks for having me.
Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing, smartpropertyinvestment.com.au/subscribe or social media, Smart Property HQ. Quick favour, if you like what we're doing, can you please keep those reviews coming wherever you listen to this? iTunes is generally pretty popular, or any of the Android apps. Let us know what you think. The team here get a real kick out of your feedback, and it does help us shape the way in which we approach the ongoing growth and development of the podcast. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.